Hi, everybody. Welcome to KeyPoint and Loveseat Home Ownership 101 Q&A session. My name is Kevin, and
I'm
we're joined
Julia
with
Wixted.
Julie. Perfect. Awesome. Just a little introduction about me. My name is Kevin Sun. I'm a mortgage loan officer here at KeyPoint Credit Union. I've been with KeyPoint for about 15 years, doing mortgage lending for 10 years. I live in San Jose, born and raised in San Jose, Santa Clara County. So, see what else. I like to play golf on free time. So,
Loves golf.
yeah. Huh?
Like I said, loves golf. That is true
Loves
of Kevin's
golf.
son.
Love going to shows. Yeah.
Hi, everybody. Sorry, Kevin, didn't mean to steal your shine. Um, I am a San Jose resident. I have been here for more the years than I would like to admit to. I went to San Jose State University, got my financing degree, went into retail banking, have also worked in the underwriting section of mortgage banking as well, and became a real estate agent full time here in Silicon Valley after I went through my own journey of home ownership with my husband as well. And so it's a pleasure to be here with you all today. Thank you for joining us.
Great. Thank you, Julia. Here's our agenda for today. We're going to go through the home buying process with Julia, the do's and don'ts. And then on my end, we're going to go through the loan process, the mortgage products, what to gather for documents and tips, and also how to prepare yourself for your purchase, your credit, budgeting, and savings. And then we'll end it with Q&A. Then we have Julia. You can start.
Yeah. So if you have gotten to this point in the journey of figuring out whether you want to purchase a home, congratulations and thank you for joining us. Like I said before, a lot of times it is very hard for people to take that first step and figure out what they don't know. So again, welcome and thank you for joining us. Before we get into the home buying process itself, I thought it would be helpful to give some context as to what makes our housing market here in Silicon Valley so unique because it directly impacts how you should approach buying a home here in our area. So, our market is influenced by a few key factors. That is the tech industry, the long-standing shortage of housing here in California, and interest rate fluctuations. And so, one of the biggest mistakes that I see buyers typically make is they rely too heavily on national headlines. And oftentimes, what you hear about the national housing market does not necessarily reflect what's actually happening here in Silicon Valley. And because of those three factors that we just spoke about, oftentimes when you hear national headlines talking about a shift in the housing market, we're still continuing to see really strong housing values here because of those three factors. And so, what does that mean for you as a buyer? Well, that means having a strategy is everything. This is not a market that you just want to jump into and write a few offers and see what sticks. Oftentimes, I see buyers who are incredibly frustrated when they go this route, and who are continuously missing out on homes that they really, really love. And so the goal is to be intentional and well prepared from the beginning. And working with a full-time realtor and lender really helps make all the difference. We're here in the market day in and day out. We're seeing what's working, what's not, how deals are being put together, and how to competitively position our clients to win in the market and obtain a house that they really love. And so our job truly is to help you move through the process efficiently, remove any unnecessary stress, and ultimately secure a home on the best possible terms for your situation. So, with that background information, let's go ahead and take a look at what the home buying process looks like on the next slide, Kevin, please. Okay, so the home buying process. Here is your roadmap. And step one really is you want to build your dream team. And your dream team is going to be made up of a full-time local real estate agent, and a full-time local lender. You want to ensure that your real estate agent has a system for supporting buyers. And so every agent works very differently. So you want to make sure that whoever you decide to hire as an agent has a system that will help support you through this home buying process. And the same thing goes with your lender. The second step is going to be you want to get fully underwritten and pre-approved by a local lender. And Kevin will talk to you a little bit more about what that entails. But I will tell you that typically what we're going to see with buyers when they go in to potentially make an offer is they're either pre-qualified, which is very surface level qualification for a mortgage, or a fully underwritten pre-approval, which is the gold standard here if you're making an offer on a home that you love. And sellers love to know that whoever they're going to be accepting an offer from is well prepared. And working with the local lender will absolutely help give you that edge because they're going to understand how to have conversations with the listing agent when the listing agent calls to verify your pre-approval, to position you in the best possible light to get the home. Okay. The next step is going to be utilizing those supportive resources that your real estate agent provides to you as a buyer. For example, in my practice, I support my buyers with a buyer offer strategy session where we walk you through the contractual paperwork, talk to you about the terms, the conditions that you can include in your offer. We also go over things like contingencies and how can you potentially utilize contingencies to protect yourself financially as you're writing an offer on a home. Another example would be is a disclosure review. So I do meet with my clients and go over disclosure packages, which includes all the important information and details about the home from the seller to help you understand that at a high level and not go into necessarily analysis paralysis. After that, you have your pre-approval. You are ready to go and tour homes. And this is where it gets really, really fun. So we take a look at houses. You can look at houses on your own as well if you'd like to go through open house, or you can schedule to see it privately. And from there, we really start to work down what is important to you. So learning how to prioritize needs over wants and vice versa, understanding how different locations may impact your lifestyle or your overall goal for this property, are also things that we will work through as we go ahead and take a look at different homes. And then it's time for you to write an offer once you find the one. And once we get to that point, that disclosure review takes place as well. So you can understand all the really important information for this home if you're potentially going to be the homeowner in the future. And so it's putting together an offer, uh, identifying all the important details, terms, conditions, and negotiating as your realtor on your behalf to get you into contract at the best possible price and terms. Available for that scenario on that particular house you're looking at. And then once that gets done, the really intense, fast part of the journey to home ownership starts. You enter into your escrow period, and that is where your lender, we pass the baton to your lender. Your lender basically starts the final portion of your loan approval, and Kevin will definitely go more into that as well. And as your agent, we are getting inspections scheduled. We are making sure that we get all and any additional information that you may need as we go through our escrow period and supporting you through that time frame so that way you feel really confident about this purchase that you are now in contract to make. And so once all of that has transpired and we are finally at the finish line, and that escrow period can typically be anywhere between 21 to 30 days, depending on what's going on in the situation. It is time to close escrow and hand you the keys to your very own new home. All right, Kevin, I think we can go next slide. Thank you. Okay, so just some quick do's and don'ts. I won't go over all of them. You're welcome to pause the video and take a look at them. We'll go over all the do's because I know everyone on here is gonna, after this seminar, gonna know exactly what the do's are. So you want to get pre-approved early and work with a local lender who understands Silicon Valley. Again, they're going to be familiar with the conversations that listing agents are going to call and be asking to get a feel for your financial situation. You're going to want to make sure that you hire a local full-time real estate agent who is working in the areas that you're considering because they are going to have that hyper local perspective to give you so that you can make an offer that is the best terms price possible as well. You want to make sure that throughout this process, you keep your lender updated as well. Kevin will go more in detail with that about your anything within your finances because they will need to re-verify all of that information once they kick off that second part uh, of the loan approval once you're in contract. You want to collaborate closely with your agent to understand real-time market data. As local agents, we're going to broker meetings weekly where we're understanding all of the market activity in real time. So you want to make sure that you're talking with your agent, asking any questions that you feel are important to you, and also communicate any potential concerns that you may feel may come up. I always tell my clients there is no such thing as too many questions. We want you to feel really confident and well prepared for this purchase that you're about to make with this really large amount of money. So those are all the do's. The don'ts are all right there on the other end of the screen. And I won't go too much into those. We'll just kind of talk about it really quickly. You do not want to delay your pre-approval process or avoid getting a pre-approval because housing is in such limited supply here in Silicon Valley. It's very likely that you will need to look at a few homes, which can take time before you find one you are interested in purchasing. And when you do find one, you really want to be able to move quickly. And that pre-approval is going to enable you to do that. You also, again, don't want to choose an agent who is vague in how they're going to be able to support you as a buyer, is not full time, maybe does this as a part-time job because they're really not going to have their finger on the pulse of the market to give you that updated inside information. Some of this, Kevin, will talk about. Don't take on new debt. Like we said, don't change anything in your finances. And if you do, communicate that to your lender immediately. And don't go into media headlines and feel gloom and doom. Like we spoke about previously on the last slide or two, our housing market here really is so unique. So it's best to get information directly from your realtor for the most accurate information. And also, like we talked about, don't stay silent or second guess anything. Um, as your realtor, we're here to make sure that you feel confident and you feel that this is a transparent process and giving you accurate information, real-time information is all a part of the service that we provide to you as your buyer's agent. Next slide, Kevin, please. All right. And so we're going to just talk really quickly about some great benefits of home ownership. Um, Home ownership creates generational wealth. We know that if in a home, if parents are homeowners, the likelihood of their children being homeowners increases substantially from day one. It builds stronger communities because there is less movement. People feel more of a commitment and belonging to their communities and establishing roots and staying long term. They know their neighbors, they know who lives near them. And this directly correlates to, improved school performance because there's that security of the home and people living there for long periods of time that help children excel in schools as well. An increase in overall health, usually because you're not having to constantly worry about what am I going to do when this lease is up? How much is my rent going to go up? Is my rent going to go up? If it does, where am I going to move? Because I'm not going to be able to afford that rent. And that also relates to just fixing your living costs, right? Your shelter costs. We all have to pay to live somewhere, and it's usually typically the biggest expense that we pay. Um, and so if you're able to fix it, you're able to fix that through home ownership and alleviate that stress and uncertainty that has an overall positive effect in your life. Um, and the last one is instills a sense of achievement. And so it's not easy to purchase here in Silicon Valley, but it's not impossible either. And once you're able to break through that barrier and step into home ownership, this now becomes a blanket that encompasses all of these different details that we talked about, like financial security, generational wealth, and overall health. And so that is also a pretty good picture of what home ownership grants homeowners. All right. So just a few more things to be aware of and to take into consideration when you're thinking about buying a home. Your home is not just your housing expense is not just your mortgage payment. It encompasses also things like your insurance costs, your mortgage, your utilities, potential costs of other components within the house that you might have to fix, right? And so having these conversations with your lender and your realtor will also help give you a realistic perspective of what that overall cost will be. Things like your credit score absolutely do matter because it directly affects how much it's going to cost you to borrow money from the bank for your mortgage. The great thing is if your credit is not necessarily high enough to get the best pricing on your loan or best interest rate, it is still something you can work towards. So being hyper aware of your credit score and if you need to make tweaks or improvement, how to do so. Um, Build a safety net, right, for when you are going to go into your home because there are different components of the home that may need to be replaced at different intervals. Here in California, we do have an aging housing supply. A lot of the houses were built in the 1950s, and because of that, it's time to change significant components, maybe like the roof, the water heater, the HVAC, and that there is a cost to that. So, your realtor can also explain those a little bit more to you on a case by case basis if you're looking at a certain home, but can also give you a general idea of these costs over time. Your pre-approval is your superpower. Like we said, if you are going to go look at homes with the intention of buying, you want to make sure that you're ready to move on the right home at the right time. And having a pre-approval will empower you to do so. Working with a full-time real estate agent and lender will also give you a competitive edge as well, taking into account things like location and what's going to work for you, what's not going to work for you, is also something important to take into consideration. We talked about prioritizing needs versus wants, and also just relying on your team, which is your realtor and your lender, to help you stay level-headed and not make emotional decisions that could, compromise your budget or hurt your over long-term goal for this particular purchase. You want to make sure that you compare loan options. Again, Kevin will go more into this as well. And also be sure that you are doing your due diligence as a buyer and reviewing these disclosure packages with your real estate agent and asking questions about anything that you're unsure of. All right. And with that, I will hand it off to Mr. Kevin Sun to go over the loan process.
Great. Thank you, Julia. Appreciate. Awesome. Great. Well, so we're going to go into the less fun part of the home buying process, which is the loan process. And so here's the roadmap of beginning to end. This generally takes about 21 days, depending on the purchase agreement. We can close as soon as 21 days, within 17 days. And so the first step of that roadmap would be your KeyPoint financial assessment, otherwise known as sort of a pre-qualification. And during this process, you kind of understand how much you qualify potentially for, and if it makes sense, then you apply for a loan or pre-approval, and then you'll submit your documentation and you get pre-approved. Now, on this third step here, after submitting documentation, this is where you're going to be working with Julia to search for homes, make offers, get into a contract, and then it comes back to me for the loan processing. And at each of these stage here, it takes about 48 hours. And at the end of this, we get to loan funding. Now, before we get to this part here, what is the difference between a pre-qualification and a pre-approval? Now, what you're probably going to want to do as a first-time home buyer or just a buyer in general, you are going to want to talk to, I would suggest talking to a couple different loan officers at different institutions to get a sense of how they process, how they work, and also just understand what type of products they would offer. Now, without submitting a formal application, what you can do is start off with a pre-qualification. This is an informal estimate based off of verbal. verbally what you're telling us in terms what you verbally tell your loan officer in terms of what you make for income, your assets, your monthly liabilities, and your credit. From there, you should be able to get an idea of how much you qualify for your purchase and if it makes sense or to even move forward with the pre-approval. Now, the pre-approval is a more formal process, requires you to submit a full credit application, typically with a hard credit check. You're going to also want to upload your pay stubs, W-2s, tax returns in some cases, and 2 months of bank statements as well. Now, this allows the loan officer to, qualify you. And essentially for a purchase, it will basically give you buying power so you can start making offers on homes that you like. Okay? And as you can see here, employment history, we want to see at least a 2-year employment history, assets, 2 months as well. Well, as I was just saying, document list. What do you need to get started for this pre-approval? You need a 30-day pay stub. If you pay biweekly or semi-monthly, 2 pay stubs, 2 years of W-2s, 2 years of taxes, especially for self-employed people, or if you have rental properties or any other income that you want to utilize that is not W-2, we would need 2 years of tax returns. Bank statements, 2 years. Okay. 2 years of bank statements. And also, 401k stocks, RSU, or mutual funds. Not necessarily, even if you don't use the funds, it's just good to show reserve, the strength of your file. And in some cases, it can use as an exception to move things forward. Now, some of the features of a loan product you're going to be seeing are fixed rate mortgages and adjustable rate mortgages. With fixed rate mortgages, they're fixed for the life of the loan, typically a 30-year loan. Monthly payments are consistent and predictable. They're usually not going to change. The only thing that will potentially change are your insurance payments and also your property taxes each year. Um, the rates are generally higher just because they're fixed for a long period of time. Of course, no adjustments. They're good for long-term stability and budgeting, and they're low risk. They're predictable. And common terms are 15, 20, and 30 years. Now, vice versa, you have adjustable rate mortgages. They vary over time and, usually a lower monthly payment for the shorter period of time, and then adjust periodically, which is every 6 months. They're best for short-term ownership, or if you have plans to either move, or if this is your starter home, or you have a goal to move within 5, 7, or 10 years, or you can even refinance if you expect rates to drop in the future. Higher risk, right? Just due to potential rate increases, which would in turn raise your monthly mortgage payment. Common terms are 5/6 ARM, 7/6, and 10/6. The 5, 7, and 10 refers to the fixed period of the loan, and the 6 refers to the adjusting period, which is 6 months thereafter, and it is a 30-year term. Other considerations for loans, not necessarily the fixed or adjustable, just loans in general. We have FHA, VA. There are down payment assistance programs as well. If you do qualify, they're usually based off of income qualification. Great. How do I get the best rate? That's always the question there. Few things. Higher credit score generally do offer better rates. It depends on the lender, but a score of 740 or higher, will yield, better interest rates for buyers. Larger down payment, the less risk that you pose to the lender, which is at least minimum 20% down, generally will get you a better interest rate. The more down, the better rate you potentially will get. Not always the case, but it's just less risk on the lender side, which then often will give you better deals. Another thing, shop around. You want to, talk to, several different lenders, kind of compare what's out there. Not every lender is going to offer the same type of program as well rates. So, with that being said, you can always ask a different lender, see what they're being quoted, and you can always kind of shop around and compete. I guess let lenders compete with each other, try to get you the best deal possible. It's just kind of like going to, Best Buy, I guess you can say as an example, and showing up with a deal online saying, can you do a price match, right? It doesn't hurt to ask, and it gives you a better competitive advantage to get a better deal with one particular lender than the other. Utilizing special programs such as FHA, VA, They do have first-time home buyers programs, and generally there are higher costs associated with these government loans. But if you're looking at solely just a lower monthly interest rate, they do potentially give you a better deal if you do qualify. Credit. If you're thinking about buying a home, you want to make sure that, the higher the credit, the better. There's a few factors that go into how your credit score, is rated. We're looking at payment history, your total debt, the length of your credit history, the credit mix. Have you ever had car loans in the past, personal loans, student loans? Things like that. Even multiple credit cards will help. And then also new credit. You don't want to open up any too many new credits because of the credit checks, right? It'll hit your credit score and then it'll lower your score. So when you're applying for a mortgage, it's going to be a lower score, not your optimal credit score. Payment history, the longer you have a history of making payments on time, not necessarily paying off debt, but just making payments, even if it's the minimum payments or just a little bit extra, it's the history of making payments on time is what's gonna um rate you give you a better higher credit score. Total debt, you don't want to utilize all of your credit limit. If let's say, for example, you have a 15,000 credit card limit, you want to maintain that balance at a very low amount. I think general rule is about 15-20%. So your score does not get affected too much. You don't want to max out your debt. That's really that's really going to hurt your credit score there. Payment history, length of credit. You don't want to close credit cards. So even if you don't use that credit card, if you've had that credit card for 20, 30 years and you're not using it, just keep it active because that's going to be part of your length of credit history. So if you close that card and you have another card that's only 5 years old, your credit history of that 30-year credit card is gone. Your history of that is gone. So your score can be affected and lowered potentially because of a closing of a long credit history. So you don't want to do that. And then like mentioned before, credit mix, car loans, different credit cards, student debt, even consider a credit mix. Okay. And you can see the grading scale, 800 plus being the best. Usually about 760, you can still get really good rates. But yeah, I think maintaining a 700 plus is really good. How to keep a really good credit score or maintain a higher credit score, paying bills on time. Even if you're paying the minimum payment, just don't miss the payment. That really affects your credit scores. Um, Keeping credit card balances low. Avoid opening too much credit at once. I think you can. It's just your score will be affected at that one moment, but if you have time to wait, it'll come back up. Um, More importantly, don't max out your credit card unless necessary, but it will lower your credit score. And then diversify your credit mix. You do get a free credit report. You can get that from the annualcreditreport.com. It's free. You can request one each year. And that way you can give you an idea of what your credit would look like. Another way to do that is go onto your banking app. You should have access and it should be free to look at your FICO score and gives you a good idea of what your score is at. Simple budgeting tips. Now, this is something that you can do before even speaking with a lender, with a loan officer, list out all your income and their amount. Step two, record your monthly expenses. List out what your minimum car payments are, if there are any, your credit card payments. Now we're talking about only just things that are reporting on your credit report. Now, although you can list out your utilities, your insurance expense, things like that nature. That way, these are going to be part of your monthly expense on top of your new mortgage payment. So you want to be comfortable in being able to qualify. Although we don't qualify or we don't count your utilities or your auto insurance payments, anything that don't show up in your credit report, you yourself still have to pay for that. So you have to make sure that you understand what you're comfortable with making payments on a monthly basis. And then you're going to subtract those expenses from your total income and you're going to see what you're able to afford net. And if this mortgage payment is going to be something within your means of doing on a monthly basis. And of course, adjust your budget. If things need to be reduced, lifestyle changes to make sure that you're not spending too much in certain things just to be able to afford, your new home. That's something that you want to make sure, you know, a lot of people do. Saving for a down payment. Now, depending on the loan amount you're purchasing and also in the county you're buying in, there's going to be at least a minimum down payment. Now, we're speaking strictly in just Santa Clara County, conforming limit up to 832,000 or 50. It's 82,000, 832,750 and below. The minimum down payment is 3%. Anything between that and 1.249 million, which is considered a high balance. Minimum down payment is 5%. And of course, anything more than that is considered jumbo, which requires a 10% down, up to a maximum of $1.5 million loan. Ways to save for down payment, savings accounts, money market usually yield a higher interest rate, certificate of deposit. They're secured for X amount of time, also yielding a higher interest rate. And then, of course, other accounts that typically you can invest in with the retirement account, 401k, IRAs, and then your stock brokerage account. Those are other ways to invest and put your money for savings. Now with down payment, anything less than 20% down, you're subject to mortgage insurance. And mortgage insurance is something that you pay as a buyer to protect the lender. You're putting more risk on the lender because they're financing, a larger portion of your purchase. And so therefore, anything less than the minimum down payment in this case would require you to pay mortgage insurance. And I've seen mortgage insurance based off of, really strong credit scores. Depending on the property type, you're buying a single family home. I've seen mortgage insurance being as low as $80 a month. So, it may make sense not to put 20% down if the money that you're saving in an investment account is yielding you more than 6, 7% on an interest per month. And while you're paying a mortgage insurance on a monthly basis of $80 to $150, like I say, all it depends, but I've seen really, really low mortgage insurance payments. So the stigma with the mortgage insurance isn't always true. Not so much nowadays. I think it's more so the educational part of the mortgage insurance. And I think by running the numbers in what makes sense and what you're able to afford, you're going to see that a lot of these payments, can be doable. So I think that ends my part of the presentation. And if there's any questions here, feel free to let us know. And you can put up information up here. My name is Kevin with KeyPoint Credit Union with the mortgage department.
Yeah, and again, I'm Julia Wixted with Loveseat Homes here in San Jose, Santa Clara County. So we are also both on many different other platforms, social media, LinkedIn, Google, Yelp. So if you would love to connect with us on any of those platforms, we would love to connect with you. And we also have additional information about, different components of buying a home too that are really helpful if this is a long-term goal of yours to purchase a home.
Okay, great. Thank you so much, everyone, for joining us today. Thank you, Julia.